What's going on? What's going on, everybody? Yours truly here, the Brockton Credit Guy, the owner of Depina Credit Solutions, the author of #1 new release book on Amazon, Unlocking Your Credit. I try to come at this channel as much as possible, at least every day throughout the week, to at least give you some tips about credit, finance, budgeting, basically help you get closer to your financial goal, especially during this year, right? I get this question a lot when people come to me because they're in the process of buying a home, or they hear from their friends or coworker or someone, what is rapid rescore? I'm surprised people actually ask that question, because mainly it's just the mortgage industry that use this terminology a lot, rapid rescore. It's been in the mortgage industry for years, for decades, and they use it case by case. I talked to some mortgage loan officer that literally don't even know about the terminology, doesn't even know if that tool exists. It's basically, so rapid rescore, it's not that you're rapidly increasing your score or rapidly changing somebody's credit. It's a tool, it's a wizard, it's a simulator that the loan officer use, because you went to them and they looked at your credit, and then basically you're telling them, no, that balance on that credit card, or that balance on that mortgage, or that balance on something, or that negative thing that showed there, it's not supposed to be there. I have a letter to prove it, and things like that. So they run a simulator, and then they go through all your credit, and then if there's any erroneous stuff that's misleading there, what they could do, they could update your credit. So there's no such a thing as rescore, right? They're not increasing your score. What they do, they updating information on your credit based on, the proof that you have. So for example, if they went through it, say, hey Arthur, you have 3 credit cards, your utilization, we see this a lot, your utilization is super high, and then you swear up and down, say, no, I paid this credit card a month ago. So it's probably a delay, because it could take, in the credit bureau, the creditor side, it could take anywhere from 30 to 45 days, 30 to 90 days, depends, to update the information, right? So that being said, you having the information, they have capability of quickly updating that information through the credit bureau, and then go in again, wait a couple of days, go in and pull a fresh credit report reflecting the new information that you have, right? So say there's a collection or charge off, they say, well, guess what? You got to pay this collection or this charge off in order for us to qualify for a certain program. So that being said, that's what they're going to do. If you said, hey, I already paid it, I have a letter here, they could submit it for a quick update. Usually I've seen it get updated within 24 to 72 hours. Nothing is guaranteed when it comes to that, but it's a tool that's being used, they mainly use in the mortgage sector, in the mortgage space, in the mortgage industry, and it helps, especially say there's a program 640, you have to qualify for 640, you're like 630, they'll go through the simulator or score wizard and stuff like that, and kind of have an idea exactly what can they do in the short period of time to update your profile. Because the thing is, you have to understand there's 5 factors that calculate that FICO, the big score models out there that the mortgage industry use, and many other 90% of the lending institution use, that they look to basically measure your credit score, right? You measure your risk. So at the top of the food chain there is your payment history. So obviously, any late payments, any derogatory, delinquent, erroneous thing on your credit there in the late, it's going to hinder you the most. You're going to see, the heavier weight, there. And then And then if you wasn't late, you have a proof you already dealt with in the past, you could give that information to your mortgage officer. They could update that information faster than you could, right? What other stuff they could do, right? And then utilization, the second biggest factor, which is 30% of your calculation. FICO said they want to see your utilization, your usage, or your balance to limit ratio, amount that you owe. This is specifically on revolving account, so they want to look at that. Just make sure that you're not using more than 30% or 50% of your available credit card. This is individually, right? So, and then once you do that, don't just go ahead and use it again, especially in the mortgage process. Another thing too, age of credit. A lot of my clients say, well, my score went up, I didn't do anything. Yeah, it's probably because you age. The longer you have credit, that you maintain your credit, the better your score is. The better your score, it's gonna go to the next level. So don't close any account. Keep the account, especially if you're in the mortgage process, right? Mixtures of credit, mortgage industry. Whenever you're doing big things, basically the scoring model is measuring your ability to be responsible and paying something back, right? So that being said, they basically looking at your mixtures of credit. They want to see that you have 2 to 3 credit cards, or but also you have some mixtures like installment loans, something that you're paying fixed in the course of time. So keep your just have some like 2 to 3 credit card, get some like personal loan or secure loan, and just pay it on time. Obviously, I'm not asking you to do it in the mortgage process, but I'm saying have some mixtures of credit. Obviously, new accounts, minimize the amount of application, especially within the last 12 to 24 months, right? If you're in the mortgage process, you shouldn't buy or you shouldn't apply for anything. So do's and don'ts when you're buying a house, just basically don't apply for things unless your mortgage officer, your credit guy like me telling you, or just don't refinance anything. It's going to be counterproductive of everything that your loan officer is trying to help you do. Keep a mixtures of credit, set up automatic payment. I can't tell you how many times during the buying process, because it could take 30 to 45 days for you to close on the mortgage, because it has to go through the underwriting and all the little things there. But the thing is, just don't apply for things. Set up automatic payment, don't use credit card over 30%. I can't tell you the automatic payment, it's going to save your life. I've seen people disqualify for a mortgage while they're in the process because of $8 or $20 late payment that happened on their credit card. So avoid that at every cost, all right? Hopefully this information is good. Let us know if you need anything. Check the videos around. Thank you.